Hi guys, it's Stock Curry, and I'm going to tell you what stock I bought on Friday in my Millionaire Club portfolio. Now, if you're not familiar with the Millionaire Club portfolio, this is a portfolio where we are depositing $250 every other week or $125 per week, whatever's easier for you. And we are doing value stock investing. We're buying value stocks, waiting for them to rise up to fair value, and then we're going to sell them and use that money to buy more undervalued stocks. And this essentially is a combination of Warren Buffett's policy plus John Templeton's. Very similar to Warren Buffett on the buys, but we're also taking John Templeton's approach in that we are selling these stocks and not just holding them forever. And if we are successful with this, we should realize an average 25 to 35% annual return on this portfolio over the course of the next 10 to 15 years. And if we are successful in doing that, then we will all become millionaires within the next 10 to 15 years. Now, the portfolio currently has about $5,000 that we've invested into it, and the portfolio is up about $500. So the portfolio up altogether about 10 to 11% since we started the portfolio. And this has been very successful for us. And we are on track to hit that 25 to 35% target by the end of this year. And today I'm going to show you what stock I bought in this portfolio. But first, I want to show you the overall portfolio and what we're currently holding. We now have 21 stocks in the Millionaire Club portfolio. We have about $250 per stock in this portfolio. And some of this was dollar cost averaged in. Some of this was all at one-time buys. The smallest position we have is worth about $170. And the largest position that we have is worth about $500. Most of our stocks are profitable, but we do have some that are losing money. Our worst performer is ZIM. That's down about 25%. Our best performer is Algoma Steel. That's up 27%. And our largest holding in this portfolio is Algoma Steel. That's 9.47% of the total portfolio. Our smallest holding is AMTD Idea Group. That's about 3% of the portfolio. We went a little bit light on that one because it wasn't quite as certain as a lot of the other stocks we bought. And I'm glad we went light because that is actually down about 20%. Overall, though, we're up about 11%, so we're doing pretty good. The one stock I bought today was OXY, which is Occidental Petroleum. We bought 4 shares at an average price of $61.22. By the way, if you want to know everything I buy when I place the trade so that you can get in on these buys while the market is still open, follow me on Twitter. I will post the buys free of charge on Twitter as soon as I make the buys. You can follow me on Twitter at twitter.com/RealScottCurry. That's twitter.com/RealScottCurry. Now let's talk about Occidental Petroleum and why I bought it. We'll go over the fundamentals in a minute, but first, I want to talk about why Warren Buffett loves the oil stock so much as well. Occidental Petroleum is not only one of the largest oil producers, it also has one of the lowest costs, with an oil price of just $40 a barrel needed to sustain its dividend. Oil is currently trading at almost $80 a barrel, and while it did drop down to just above $70 a barrel late last year and early this year, it has started to rise a little bit this month. And if you look at a 5-year chart here, yes, oil has been going down, which is why we see OXY down from its highs. But if we look at that key $40 level, we only fell below $40 once, and that was during the COVID crisis. And with oil prices remaining above $40 for the last 5 years in a row, with the exception of a few months in 2020, this is looking like a really good stock, one that not only should continue to be profitable, but also one that should be able to continue to pay out a really nice dividend. Now, taking a look at the OXY chart, we didn't quite buy it as cheaply as it had been trading in the past, but we did get it really close to the price that Warren Buffett paid, so I'm pretty happy about that. Warren Buffett has an average price on his stocks at about $59. We're at $61, so we're really close. Now, the real thing about a value stock is it has to be undervalued fundamentally. And if we take a look at the PE ratio, it's currently at 4.97. Now, even though the sector average has dropped down to 6.09 in expectations of oil prices going down in the future, OXY is still about 20% below the sector average. So OXY has some really good fundamentals backing it up. Let's dig a little bit deeper and take a look at the income statement, balance sheet, and cash flow statement. Taking a look at the income statement, we can see that OXY has been consistently profitable. Now, we might start losing a little bit of profits going into the future just because oil prices have come back down. We're not going to be maintaining that 1,400% rise and that 3,500% rise like we had in the past. This 27% rise is still really good, though, considering how high oil was a year ago. And the dividend is remaining consistent at 13 cents per share. That might be reduced a little bit if OXY ends up lowering their profits. But right now, as we mentioned earlier, oil could drop all the way down to $40 a barrel, and OXY would still be able to pay out this 13 cents per share in dividends. Now, taking a look at the balance sheet and specifically looking at the current assets, excluding inventory, which I don't like to include, we have $4.28 billion in accounts receivable and $984 million in cash and cash equivalents. That gives us a total of $5.26 billion in short-term assets. Now, current liabilities is at $7.76 billion, which is a little bit high. I really don't like to see current liabilities higher than the immediately available current assets. But they have been free cash flow positive, pulling in over $2 billion a quarter for each of the last 4 quarters. So because they are free cash flow positive, this makes me a little bit more comfortable about the balance sheet not being completely lovely on the short-term assets versus short-term liabilities. So overall, OXY is a great value stock. It's undervalued on the PE ratio. It has a really nice dividend, and they're profitable. Plus, they have positive net free cash flow for each of the past 4 quarters. The only red flag on this stock is that their current liabilities are a little bit higher than their current assets. But other than that, this is a great value stock. So I did open up a standard position today, about $250. That's the amount that we normally deposit every other week. And so I used that money to go ahead and buy OXY shares today. Now, I do deposit $250 every other week, but that money takes time to clear. So currently we're sitting at about $26 in cash in the portfolio. Plus we have the $250 in deposit that will clear sometime in the next week or so. So altogether, it'll be about $276 in cash that will be in the portfolio available for next week. So that's what's going on in the Millionaire Club portfolio. Now, I also wanted to let you know that every Monday morning, I put out a newsletter where we talk about the stock market, we talk about the fundamentals, we talk about the technicals, we go over everything that you need to know to get prepared before the stock market opens on Monday. If you want to get that free newsletter, I send that out every Monday morning. You can sign up for it at stockcurry.vip/newsletter. All you have to do is put your email address in there and click submit, and you will get the newsletter in your inbox every single Monday morning free of charge. Again, the website to sign up is stockcurry.vip/newsletter. If you got a lot out of this video, then be a good friend and share this video with your friends and family. And don't forget to hit the like button and subscribe. And if you missed the buys that we did last week, make sure you watch the last video that I uploaded here.